Let's kick it off with Morgan Stanley on track to actually close the day higher. It's kind of been seesawing throughout the trading day following its Q1 earnings results. Now, the big bank's equity sales and trading revenue was below estimates. Its profit was also off about 19% from a year ago, hit by a slowdown in deal making. Certainly a common thread among the big banks this quarter. Investment banking revenue also falling 24% on the earnings call. CEO James Gorman reassured analysts that he thinks that we are not in a banking crisis. He did, though, warn that there has been and may still be a crisis among some banks, but really distinguishing what is going on in the regionals compared to what is going on with the big banks today. It certainly was not all bad news here for Morgan Stanley. One of the bright spots in this report is its wealth management business. Revenue from that division rising 11% from a year ago, accounting for about 45% of total sales in the quarter. Ali, we know that this is a trajectory, that wealth management business is a focus here for Morgan Stanley, and also really boosted these results when you compare it to some of its largest competitors within the space.
Yeah, really strong results on that side of things. But it's just been a wild Q1 for a lot of these banks amid those rising interest rates, the ripple effect of SVB, also the outflows of deposits that we've seen. Morgan Stanley reported that deposits were down 3.7% from a year ago, 2.5% from the fourth quarter, and that's a trend we've seen for many financial institutions. But what also stuck out to me was a recession commentary from Gorman on the earnings call. He spoke about the possibility of a modest recession, warning that if inflation isn't tamed, interest rates could go much higher than people expected. He said that seems like an unlikely scenario at this point, but by and large, overall pretty positive. He said on a go-forward basis, the bank is in a strong position, and that seems to be the trend here. Cautiously optimistic, but optimistic nonetheless.
Yeah, I think if you characterize the whole sector, it's better than expected. We all have a note from Gorman who said he sees stresses in the economy, citing, no surprise, particular weakness in commercial real estate, which we are really beginning to learn just the beginning of what's ahead in commercial real estate, but actually added, it feels surprisingly benign, the stress in the economy, compared to what it could have been. So yeah, overall, better than expected, could have been a lot worse.